5/24/2020 CMG, our biggest bull run from the pandemic crisis down here, buying calls all the way up. Unfortunately, on a weekly chart, we're about as overbought as you can get. And we exited this big trade. So now what we're going to pull up here on the screen is the 1060 calls that were at $8 and shot straight up to 2260. These are inflated. They are going to come down, and we have set alarms accordingly based on CMG weekly chart being extremely overbought. We're looking at a trade to pullback and make money on the pullback from overbought levels. When we take a look at the 1060 put chart on a 4 hour, they were up here at $45. Now they hit down here at $21. These are totally deflated in price. This is the lowest entry possible for a pullback on the put side for the gains on CMG. Can CMG go up above 1060 on Tuesday? Yeah, it can. But it will be overbought, and it will come down, and it will pull back. So knowing when to cash out in an overbought weekly stock, and then knowing that the 1060 calls at $8 went skyrocketing up on Friday, and this is the call chart. And when they get up here, what happens is you don't sell them. Then they go down in value, and this is the setups, and it's pure mathematics at its finest. And CMG was a great stock all the way up. We've been trading this for many years. And we can see here what the last 4 week, the 3 weekly breakout right here. And you know, buying the $800 calls, and it ran up in 3 weeks, another $260. Well, we're at the highs. And you got to know when the good ones are overbought and when to exit. That just so happens to be the case right there. The call side of the market is totally inflated. And it was a great trade, and knowing when to exit. 99% of option traders never know when to exit. Why is it that I have the least amount of risk by trading the pullback? If I'm buying down here at $18 a contract and they're $45, I'm taking out all of my capital risk. We're not saying that CMG stock is a bad stock. We traded it all the way up. It's overbought on a weekly, and it's going to come down. I'm concluding that we'll be looking at the 1060 puts, the 1070 puts, the imbalances between the call side, the put side of the market, with a weak, extremely overbought stock that has had a tremendous run, the best run out here in the restaurant space. And we've always made a fortune on CMG. Well, CMG has to pull back. And when it does, then we'll go ahead and buy the pullback. But it will pull back. And this is how you make money on the great stocks that are overbought. And knowing when to exit, looking at the calls, looking at the puts, get into the free 5-day trial. Take advantage